Hey guys, and welcome back to my channel. Today we'll be talking about return on investment.
Dun, dun, dun.
Return on investment is a hot topic amongst entrepreneurs and business people of all kinds. This is because this is the best way for you to make business decisions on whether you should be investing in something or not. So in this video, we're going to be talking about what return on investment is and how you can calculate it simply to make better decisions. So this will be really useful if you're interested in investing in anything like property, stocks and shares, Bitcoin, or anything else really. So if that's you, stick around till the end. I've got a special bonus that I'm going to give to you to help you get started at the end of the video. Before we begin, if you're new here, then go ahead and click the subscribe button so that you can be involved in the channel and know what's going on and keep up with the value that I'm adding. While you're there, hit the notification bell so you can be notified every time I put out a new video, which is every week. So why am I talking about return on investment? As I said, this is really important for anyone who's looking to run a business. As you know, this channel, we're going to be talking about running businesses. So my business consists of two different things. One is property investing and the other one is property deal sourcing. For those of you who don't know the two things, property investing is when you buy a property, rent it out to take monthly rental income. Or you can buy the property, refurbish it, and sell it on for a profit. The other side, property deal sourcing, is when you find a property that has really good return on investment and you find an investor that is really interested in getting this return on investment, and you marry the two up and take a commission from it. So as you can imagine, in both of these ways, return on investment is a really important metric for me to be keeping track of. So what is return on investment? Return on investment is a really broadly used term that basically means how hard your money is working when you invest in something. The exact definition is that the return on investment is the ratio of the net profit and cost of investment. Now, in layman terms, this is the amount of profit you make in a year after all expenses divided by the amount of money you've invested in the opportunity. And this is usually expressed as a percentage. Now, a quick thing to note here is that return on investment, as I said, is a really broadly used term. So this can mean different things to different people in different settings. Investment doesn't necessarily have to be money. This can be investing in time. You could have invested time in order to get knowledge out of something or results out of something. You could have invested emotion to get some result that you were investing in. So for that reason, return on investment is not a very specific terminology that you can use. In this video, we're going to be talking about return on investment in terms of financial investment. So the money you put in and the money you get out. The correct terminology for this is return on cash employed. But for ease, we'll use return on investment or ROI throughout the video. So now you understand what return on investment is, let's talk about how you can calculate return on investment easily. So to do this, I'll go through my computer and then I'll take you through an example there. All right, we're in my computer now, and hopefully what you can see is a little house. And this is a standard house that we're going to be considering for this example that we're going to be talking about for calculating the return on investment. This house is situated in the north of England, has 3 bedrooms, and is on sale for £100,000. This is a standard example. People in London here are now going a bit crazy, thinking, where can you buy a 3-bedroom house for £100,000? It's possible. You just got to look in the right places. So if we're looking in the north of England, £100,000, 3-bedroom house, let's look at analysis for the return on investment. So first things first, let's recap on the formula that we just talked about earlier. It is the profit after expenses divided by the money you've invested times 100 to turn it into a percentage, and that gives you the return on investment. So in this example, there are 3 things that we need to consider in order to calculate the ROI. So first of all is the purchase costs of this property. Then we're going to calculate the cash flow, or otherwise known as the profit after expenses. And then that will lead us into calculating the return on investment. So let's first start with the purchase costs. So purchasing costs, first of all, we know that the purchase price is 100,000. In this example, we are going to say that we're not going to buy it with cash. Of course, that is a possibility, and there are plenty of other ways to buy a property, but in this case, we're going to say we're going to buy it with a mortgage, like a normal property. So we've got a 75% mortgage as a standard example, and that leaves us with 25% deposit that we'll need to put in ourselves. So those are the numbers you see there. The purchase price is 100,000, and so if you're going to put in a deposit of 25%, which is 25,000, the mortgage you will borrow is 75,000.
Next, what we need to consider is the stamp duty and legal, and this is something you would have to do and pay while getting while buying a house in the UK. In reality, there are varying amounts of stamp duty you will have to pay depending on the purchase price. So just make sure you're checking on Google what the stamp duty is. You can just search stamp duty calculator, and then usually add about 1 to 2% for legal, depending on where it is. Of course, in this case, it's in the north of England, so we can say 1% is fine. Next, we have to budget for a survey because we don't want to be buying a house without conducting a survey to make sure everything is fine. Now that leaves us with the total capital invested if you add up the deposit, the stamp duty and legal, and the survey costs, because that is the amount of money that you are investing to buy that property. You're not paying the full £100,000 because we're not buying it in the cash. We're going to be just paying the bits that are in the green bracket. So the total capital invested in this case is £29,500, which is, if you look at the formula for return on investment, that is the money you've invested into this investment opportunity. The next thing to consider is cash flow. For this, we know that the income is rent. On a monthly basis, we'll be getting rent. So I've just put an arbitrary number here. An example monthly income is £650 for this 3-bedroom house. So next thing after the income is expenses. So for expenses, we'll need to consider first, of course, the mortgage payment. So we bought this house on a mortgage, and therefore we need to consider the monthly mortgage expenses that goes from here. Remember, again, we're going to be paying on an interest-only basis. Again, you have to use different numbers if you're going to calculate it for a capital repayment, or if you've got different numbers. At the moment, the mortgage interest rate are really low, but 3% is a good conservative number or an average figure that we can use. For this example, it serves the purpose. Now remember that the mortgage was 75% of the purchase price, so that was £75,000. So if you look at that, this is what the calculation is. A lot of people try to overcomplicate this, but this is relatively simple. Just take £75,000, which was the mortgage amount, times by the interest rate, so 0.03, divided by 12 to give you the monthly figure, because there's 12 months a year, and that's £188. Next, because we will need to manage, we'll need somebody to manage the property, and we will have running expenses. We're going to be budgeting 10% of the rental income for both of these things. So management costs are 65, and the operating expenses are also £65. That gives us a total monthly expenses of £318. So now we've got the income and we've got the expenses. Then we can calculate the cash flow because of that. So the cash flow is nothing but the monthly rent minus the monthly expenses, and that gives us with £332. So now we've got all of the figures that we need in order to calculate the ROI. And because the ROI is calculated based on annual figures, the annual cash flow is just the cash flow times by 12, which in this case is £3,924. And that in the ROI formula in the top is the profit after expenses. Now remember, this is before tax, because you are getting taxed at the end of the year. So now we get the ROI figure. Let's recap on the numbers that we've already calculated in the first couple of steps. So in step number 1, we had the total capital invested, which is £29,500. And in step number 2, we just calculated the annual cash flow, which is £3,984. All we need to do now is plug it back into that formula to calculate the return on investment. So put the annual cash flow into the profit after expenses, and then put the total capital invested into the money you have invested, and times that by 100 gives you 13.5% return on investment. Now, a lot of people ask me, is this good or is this bad? So that really depends on kind of what you are expecting to get and what your strategy is in order to purchase this property or not. But what I would say is, what are you getting in the bank at the moment? So of course, in the bank, you're probably getting about 1% or so. And then if you've got stocks and shares, then you might be getting some other figures. Here, we're getting 13.5% return on investment annually. So it is, of course, a lot better than what the banks will give you, but there's a lot of risks involved anyway. So as with any investment, and I'm not really qualified to give you financial advice. I'm just here to show you how to calculate the return on investment. So you have to go and make judgment on whether you want to move forward with any purchase or not by yourself. Remember, of course, this is not meant to be an extensive calculation on the exact house. We just picked a sample house, which is black and white, to calculate some sample figures to give you the process that hopefully you will now understand how to calculate the return on investment for this example, which will give you 13.5%.
All right, I hope that was useful. Now, this is a generic example that we used today, but of course, there's a lot more detail that can be added to the calculation, and you have to do it on a case-by-case basis. But this should be enough to get you started and get you going in analyzing some deals, especially if you're in the property environment, then analyzing some property investment opportunities or analyzing property deal sourcing opportunities. So I hope you found that useful to get started on. If you did, then comment ROI below so that I know that you found it easy and you know what to do now. If not, if you've got a question, then put it on the comment section below as well, and I'll see if I can answer those. If you've got a more specific question, or you would like me to take a look at any investment opportunities that you have analyzed, then follow me on Instagram and hit me up with a message, and I will get back to you with some of those things. Now, I did say I was going to give you a bonus at the end of the video, and this is pretty much the end of the video, so here's the bonus. So if you want a cheat sheet on how to calculate return on investment and a template for you to just easily follow and go through the steps to get you the return on investment calculation, then go in the description and follow me on Instagram. Then send me a message on Instagram saying you want the bonus, and I will send it straight to you so you can use it when you're analyzing deals and calculating the return on investment. So guys, if you found that helpful, then hit the like button below. If you haven't already, subscribe to my channel and hit the notification bell so you don't miss the videos when I'm putting them out. Now, if you think any of your friends will benefit from this video as well, then feel free to share it with them. And that's the end of this video. Thank you for tuning in. I will catch you on the next one.